This video is for educational and informational purposes only. Mutual funds and stocks talked in this video are purely used as examples. This video is not meant for advisory or recommendation purpose.
Hello everyone, I am Anish from aliceblue. Welcome back to our technical analysis series. In this video series, we will be exploring various techniques and indicators used in the field of technical analysis. Please watch the entire video and do like and subscribe to the channel and hit the bell icon to get new video updates. To know about the basics of charts, support and resistance and other basics of candlestick pattern, watch my previous in the technical analysis category. In this video, we are going to discuss about the bullish engulfing candlestick pattern and its price action, and how we can use this bullish engulfing candlestick pattern in our trading system very effectively. Come, let's get into this in detail now. Bullish engulfing candlestick pattern is a dual candlestick pattern. When this candlestick pattern formed in a pro downtrend with the help of proper support level or in a proper demand zone, means we can use this candlestick pattern as a valid reversal confirmation candlestick pattern. The bullish engulfing pattern occurs when a small bearish candle is followed by a larger bullish candle that completely engulfing the previous candle's range. First, we see a small bearish candle which indicates selling pressure in the market. Next, a larger bullish candle emerges, completely engulfing the previous bearish candle's range. The key characteristics of the bullish engulfing pattern is the bullish candle's body fully covering the previous bearish candle's body. Now we can see the bullish engulfing candlestick pattern formation in a downtrend and its execution procedure. Now you can see the price is completely in a downtrend. In a downtrend, we can identify a bullish engulfing pattern. The bullish engulfing pattern's high is our entry and the swing low will be our stop loss, and the higher level resistance or a supply zone will be our target. Now we can go to our TradingView platform to understand the bullish engulfing candlestick pattern's price action and the execution procedure in a real live chart. Come, let's go. Welcome back to our TradingView platform to understand the bullish engulfing candlestick pattern and its price action. So now we are in a chart. Let's imagine this level will act as a 530 to 524 level will act as a demand zone. Let's imagine. Now the price is getting rejection and falling from 580 level to 530 level. It's completely in a selling pressure. The price is completely in a selling pressure. Completely in a selling pressure. So once the price will touch our demand zone, what will happen? Here we have some valid confirmation. From that confirmation only we can go for a long side trade, which means we can buy the stock. So here you can see the price is once touched our demand zone, it's also creating a bearish candle. The bearish candle signifies the sellers are greater than the buyers, which means the selling pressure is high. After that, here the bullish engulfing candlestick formation is there. Here you have to see one condition. This is a bullish candle. It's in a green color. You can see here how the candles look like. And this candle is opens below the level and it should closes above the high of the previous bearish candle. Here it's the closest price. This is also okay. And the open and the closing price is also the same level, means also it's okay. And this condition is the candle, the bullish candle should closes above the open price of the bearish candle. So this is the valid bullish engulfing pattern. If the pattern is formed, here we have to take our entry and the swing low will be our stop loss and the higher level resistance. If say for example 543 is a resistance and 555 is the resistance and 560 is also a resistance. Let's imagine 565 is also a resistance. And this resistance 1 will be our target 1 and target 2 and target 3. So this is how we can use the bullish engulfing candlestick pattern as a proper reversal confirmation candlestick. So now I am in a DLF chart. Let's go to 2 hours time frame, which means 120 minutes time frame. You can see here it's a very good demand zone. It's a very good demand zone. So this demand zone have a very good achievement also. For that I am selecting this demand zone. So from this demand zone only we are looking for a long side opportunity, which means the proper candlestick confirmation. Now I am shifting my time frame to 1 hour time frame. Here if we find any bullish engulfing candlestick pattern, means we can go for a long side opportunity, which means we can buy the stocks. For that I am using that indicators like engulfing. You just go to indicator column and type engulfing, means there are two indicators will be there, engulfing bearish and engulfing bullish. I am taking engulfing bullish. You can see here BE means bullish engulfing. This is a bullish engulfing candle. After that, this is a bullish engulfing candle. We always look the bullish engulfing candle in a proper key level, which means in a demand zone or in a proper support level. So from that, this is our entry. Here is our entry, and our stop loss will be our swing low, and the target, the first target, this is the, I'm just using line chart to identify the resistance. This is the first resistance, which means here is our target 1, and this is our second resistance. Here is our target 2, and third resistance will be here. This is our target 3. So now let's see target 1. Let's see target 1. So this target 1 is achieved. After that, you can see here there is a huge consolidation over the target 1 area. After that, the target 2 is also achieved. After also you can see in the target 2, the resistance level also, the price is getting rejection from that level. And in a target 3 also, you can see here, the target 3 is also achieved. This is how we can use the bullish engulfing candlestick pattern as a proper reversal confirmation candlestick pattern. And again, you can use this technique with RSI also. So in RSI, you can go to RSI and check the RSI. RSI means relative strength index. So you can take RSI also. You can see here the RSI is trading below 30. The 30 means it's a oversold area. If the RSI is trading below 30 means again the price should reverse from the level. So this is, here you can see, once our target is achieved, the RSI is trading above 70. The 70 is the overbought area. In the 70, after the 70 level, again we can expect a massive reversal from that level. This is how we can use the bullish engulfing candlestick pattern as a confirmation candlestick pattern with the help of RSI. We can hope you all understand the bullish engulfing candlestick pattern, its price action, and how we can use this pattern in our trading system very effectively. See you in the next video with another interesting technical analysis concept. Until then, subscribe to our channel and hit the bell icon to get new video updates. This is Anish signing off. Thank you.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.